I can't figure out if the markets are down because a lot of people are angry they didn't get off this week, or there really is pervasive gloom and doom. I mean, there is actually a pervasive gloom and doom out there. Guys, listen, it's
Any case, this is the Dow Jones Industrial Average. The short term is not really what we're looking at right now. The intermediate term, which the LA Wave Market Service uses, this is the important thing. This has now turned bearish for the first time on the Dow Jones Industrial Average since, I don't know when, since way back to here, I think. In any case, here's the Dow Jones Industrial Average. Again, today is not on here. We're down here, folks. Actually, we're down here right now. We lose 16.4 on Monday, which I don't think we will. I think we will bounce. All right, we're due for a bounce. It doesn't have to bounce, but we're due for it. And there's a trend line. It's hard to see, or a channel that he's drawn here. It's broken way out of that channel. It's now starting a new, more steep channel down. But, you know, that kind of steep movement, we do usually get a bounce. Don't let it fool you guys. As you can see, nothing ever moves in a straight line. We went from way down here to way up here in a relatively short period of time. This is a daily chart. But look, it was anything but a straight line. So same thing on the way down. However, the way down tends to be more severe. Look how severe the rise was here. This is very unusual. This is what happens when you have intervention from a central bank. Oh boy. So do you think you think Janet Yellen is going to raise interest rates in September? Janet Yellen isn't going to do any such thing, just like I've been saying all along. They're in the corner. They're trapped. They're not going to do anything. And they're yapping back and forth and worried about a 0.25% change in interest rates. Please, if they're that worried about a 0.25% interest rate, that should be a red flag to everybody in this country, that if they're so worried about that, a 0.25% change, that we are literally walking on eggshells with the economy. And guess what happened? We actually fired the first salvo, but we're blaming China. China has been playing the game, and I might as well get into this now so you can understand what's going on with this. We are at war with China already economically. China played the game pretty much set up by Kissinger and Nixon back in the early 1970s to where they would be the cheap manufacturers for the United States of America. They were fine with making their own people slave labor in their own country. And now the people over there have gotten to the point where they're becoming like lower middle class, like many Americans did over here in the 1950s. And it feels good to them because before they were working all week for a daily's wage. And now they're working daily for a daily wage or 2 days' wage. They've come up in the world a lot. And what they're doing with their money is they're investing it in the stock market over there, because that's the only thing that's really giving any kind of real return, because that's the only real form of capitalism they've got to work with, because everything else is the Chinese type of capitalism that they've incorporated, which is kind of a weird capitalist type of free market combined with the iron rule of communism. But in any case, without getting too much detail into how that works, the Chinese people were allowed to do a few things. One, they were highly encouraged to buy gold and silver, and many of them did. And I believe China is going to confiscate the gold of the people over there eventually, just like Roosevelt did here. Then China came out and lied about how much gold they had, and that was to help the West. And that was a gesture to the West it was sort of a, everything with China is tit for tat. It really is. I give you this, you give me this. But the difference is we look at doing something with the economy till the next 2-year election or 4-year election, usually 2 years. It's the next congressional election. We run everything by that. Okay? How can we make it look good 2 years from now? If we go that far. China, on the other hand, they're looking 50, 75, 100, 200 years in the future. That's the difference. They plan long term, we plan short term. Now, in the 1970 time period, all right, which how long ago is that now? That's that's coming up on 45 years now since they started talking with the U.S. about this great economic gain that we were going to allow them in on the action on the West. They would be the new manufacturers. We would eventually ship all of our jobs over to theirs and hire their workers. And they were willing to play the game. But see, part of the game is to eventually be with the big boys as far as having your currency be counted into the basket of currencies. That's when you're the big boy. Now, China knows that it had to do several things to play with the big boys and to get into the international basket of currencies. First of all, it had to buy gold. And they purchased so much gold that it would become obvious, very obvious, if they were to announce honestly how much gold they have purchased. It would become very obvious that the United States no longer has gold at Fort Knox. Those of you who have kept track of everything that's been going on, you know there's no gold here in the West. There's no gold here in the West. This is why Germany can't get their gold back from the Federal Reserve. It's not there to give it back. And after a few years, they scrape enough to give maybe 3 metric tons when they should be getting, 100 metric tons or whatever the numbers are. We're giving them very small fractions of what they're asking for, and we're dragging out the time period. And Germany did a lot of complaining about that for a while until we told them to shut up, because all of a sudden it was okay, whatever our timetable was, to get them their gold back. And believe it or not, the German people, they should have been squealing like wild pigs, but they did a little bit, but then they shut right up. So, we've gone through our gold. China's got it, but China did us a big favor. This, early summer, they announced their gold holdings, and I think they said it was 600 tons, something like that, 600 metric tons. Whatever the number is, they imported that actually probably in 1 month last year. But what it did was, it was a gesture. It was a gesture to the West saying, look, we're not going to blow the lid knowing that you don't have gold anymore. And you know how they know we don't have gold anymore? Because they have so much gold over there in China that they know the only reason why they were able to accumulate that much is if the United States got rid of its gold, because there hasn't been that much mined since then to make up for it. So China did us this big gesture. And then knowing that this October, the International Monetary Fund was going to announce what basket of currencies would make up the currency mix, just like now. And by the way, there's a lot of people making money off of that, and don't fall for it. They're saying, look, this October, new currency's coming out, and you better be aware of it because blah, blah, blah. And they're selling all kind of financial things to get you prepared for it. Well, all we are coming out with that we know of anyway is a scheduled remix of the basket of currencies. Like, it's the U.S. has the greatest percentage, and then it's followed by the euro, and then the British pound, and then the Japanese yen, and so on and so forth. And China's not included in that. The yuan is just not included in it, but they want it to be this time. Now, what else has China done? They've set up gold and silver exchanges. They've set up mercantile exchanges, just like the Chicago Mercantile Exchange. They set up their own stock markets. They even have their own SWIFT banking system. They've created the BRIC nations and all the economics that goes with that. They're doing all kind of contracts in and without, mostly without, using the U.S. dollar. And they have really stepped up the use of the Chinese yuan. And they did the big favor to the U.S. by not revealing the secret that the U.S. gold is gone out of Fort Knox. And they were fully expecting the tit for tat, the pat on the back, thank you for playing the game. And they have been dutifully playing the game, guys. They've been playing by all the rules, including keeping their currency strong. So the IMF came out. China's fully expecting them to be part of the mix, the basket of currencies that makes up the USDX. Guess what? China was excluded. See ya, buddy. You're not good enough yet to play big in the big leagues with the other boys. Well, this was a major loss of face to the Chinese. And I'm talking major. And you don't want to make the Chinese lose face. Talk about revenge being sweet. The Chinese love revenge, especially if they've played the game the way they should have, and then you screw them over, especially publicly, which is what we did to them. So what happened? China came out, what was it, last 10 days or so, devalued their currency. That's not part of the game. They're not supposed to do that. A couple of days later, what did they do? They devalued it some more. And ever since then, the markets have been in turmoil. And you know what? As soon as our economy is weak enough, China is not going to forget what we did to them. Expect them at that point to either threaten or in reality start dumping treasuries. All they have to do is threaten it, guys. They don't actually have to do it. Dumping treasuries and or dollars. And boy, are we going to pay the price then. That is going to be when it tumbles. And I don't know if it's going to be by September or October or November, but it's coming. And they're just going to wait for us to get to a very vulnerable spot, and then they're going to pull the plug on us. And it's over. The way we have known everything then is over. And you better believe it, and you better prepare for that. And there's a lot of other videos I've talked about which go into that. But that's the big story with what's going on right now. Once we are weak enough, we're not going to recover because China is then going to pull the plug. If you think the plug's pulled now, just wait. The plug is in. Wait till they pull it. This is going to be small potatoes on the chart. All right, so what's holding us up here from saying 100% for sure that we're definitely now in bear market territory? Well, we need everything to comply, one with another. We have the Dow Jones Industrial Average. Okay, it's rolled over and turned bearish. Let's look at the next one. Again, here's the S&P 500 index. And again, this was yesterday. I don't know where we are today, but we're probably down at least to the 1980 level, if not more. Let's see if we broke that support. Let me give you the support levels on the way down. At one of these support levels, we're going to get that wave 2 bounce. It looks like 1980, 1950, 1900, 1870, 1830. Those are the support resistance areas going down. It looks to me just real quickly on this chart, the biggest one is the 1900 level. If we breach that, that's when we're going to go into free fall. Just like it breached it briefly here, we went into free fall. This is the plunge protection team fixing us up the last time. There is going to be no fixing this time, guys. The bullets have already been spent out of the chamber. So now we've got 2 of 4 we've looked at, the Dow Jones Industrial Average and the S&P 500. Let's continue. Okay, this is number 3 here. We usually don't, I usually don't show this too much. This is the New York Stock Exchange Composite. I believe this is the one that used to be called the American Stock Exchange, AMEX. American Stock Exchange. Again, we fell majorly today. We're probably down in the 10.3 level, somewhere in there. And